In money matters, the Johannesburg Stock Exchange is weaker along its global peers. We speak more on the latest market moves with Grant Nader, and he is with Benguela Global Fund Managers. Thank you very much, Grant, for your time this afternoon. Let's start with exactly that, the mixed bag coming out of the United States in terms of data. Help us make sense of the retreat in early trade of the JSE.
So over the last few days, we had some really positive market data, which was the softer inflation figures coming out of the United States, which triggered a weaker dollar, interest rates coming off, and hopes that the Fed was done raising rates. And globally, we could start seeing a rate cutting cycle somewhere on the horizon. We've seen a lovely 3-day rally in the market. But what happened yesterday was we saw a reminder that the US economy is actually very strong. Consumer retail spending is still actually holding up and came in better than expected. So as long as that economy remains stronger than expected, one needs to be careful about getting ahead of yourself in expecting rate cuts from the Fed. So that put a little dampener on the mood. And at the same time, there's been such a strong move that there's also a bit of profit taking in the move. You know, the JSE is down about 1.3%, but still up a good 2.5% over the past 4 or 5 days, and pretty much across the board, almost every stock still in the green with a 5-day view rather than just looking at today. So broadly speaking, we're still in good territory. The Rand is holding on to almost all of its gains. The interest rates in South Africa are holding on to their gains. So the foundations still remain positive, but we've got to be careful of getting too far ahead of ourselves.
Well, there are concerns still, Grant, that the United States' record high oil production is putting pressure on prices rather under pressure. Help us make sense of that.
So that is true. I mean, the United States shale production is a huge marginal producer. They are quick to increase and decrease capacity. But I think the critical question is, are oil prices coming down because demand is slowing or because supply is increasing? If prices are coming down because there's a slowdown in demand, that's a negative. If they're coming down because of a production glut and a supply glut, that's a positive. Because if you think about it, even from a South African point of view, we want a stronger rand and a weaker oil price. Feeds into our inflation, it feeds into our interest rate outlook, so that would be positive. There's a lot of moving parts in the oil price. There are OPEC's expecting a strong demand outlook in the year to come, whereas the International Energy Agency is saying they are seeing pockets of weakness and inventory buildup. So it's very unclear. Russia is definitely still supplying almost all of its capacity to the market, even with the sanctions. So that's keeping a lid on prices. But there's a new ban coming on Iran from America just to pull 1 million barrels of oil out of the market. So there's a lot of toing and froing on both sides. It's a bit unclear at this point, but for the moment, the downward pressure is at least positive from a South African perspective.
Let's take a look at AB InBev. They will establish a renewable electricity group buying initiative in partnership with global sustainability solution provider South Pole. What motivated the move? So
this is predominantly going to be implemented in Europe, and Europe is certainly the leader in global renewables, global environmentally friendly sort of transactions and policies. And so AB InBev, the initiative is really to support their suppliers and their customers who perhaps don't have scale or capacity to procure renewables, to build their own renewable capacity, etc. So this partnership is going to enable buying across their value chain, across their supply chain, and just enhance the whole ecosystem of green energy. So it's a very positive initiative. I think it's in isolation. It's not going to move the needle in any particular direction, but if it sets a trend and a tone for broader participation, I think it will be very positive on that front.
All right. Investec has posted its results for the financial year that ended September. Help us make sense of the numbers.
So that was a very strong set of numbers. We look at, they reported in pounds. So the UK bank delivered a very strong number, around 60% growth in profits. And in South Africa, they grew around 15%. When translated into pounds, there was an 18% tailwind. So overall, the growth was around 17%, which is very strong in this environment. And they were aided by rising interest rates driving their net interest margin and some good cost reductions. They had some very good cost control, and they grew their revenues faster than their costs grew. So that was another positive. We've seen some strategic spin-off of certain assets, which is helping them, the property sector, the private equity. They've been spun off, so that's improving their return on capital. We're seeing they've done a partnership with Rathbones, whereby they've tied up their wealth and investment business in the UK. That's been a positive move. So they're doing a lot of the right things. They seem to be staying on top of the credit loss expectations in their loan book. So that's another positive. And so there's some assistance from the market and the environment, and then they're also doing a lot of internal things that are very well at the moment. So it's good operations, a fairly positive outlook, and I would say that it's a good statement overall. I like what I see.
Okay. Do you like what you see here? Goldfields operating update for the quarter ended September highlights that the forming of a joint venture with AngloGold Ashanti is taking a bit longer than expected. What seems to be the hold-up?
Yeah, you're right. I don't like that, what I see. So in Ghana, in particular, that joint venture with AngloGold there's nothing between the companies that's holding it up. It's about a government approval, and that's where the delay is coming from. The Ghanaian government has obviously got some question marks or some concerns, and some delays there are holding the project up. But barring something unforeseen, I think they will get it over the line eventually. Outside of that, the production update did point to quite a big slowdown in production. It dropped about 9%, which is not good. And even more negative is their all-in sustaining cost of production for Goldfields went up about 30% in dollar terms. So that's undoubtedly going to put pressure on the bottom line in terms of falling revenues and increasing costs. So not a strong update. The one positive was the Salares Norte venture in South America is coming online. That seems to be on track. They had to revise the schedule, but that's coming on track, and they expect their first gold production to be by the end of December. So that is a positive if we want to look for positives in this update.
Alrighty. Thank you very much, Grant, for your time this afternoon. Grant Nader is with Benguela Global Fund Managers.